Good afternoon, welcome to GrainTV. It's November 5th, 2013. I'm Logan Burgess. To my right here is Brock Shimano to help break down the action that we saw on a Tuesday in the grain market. Turning over to Fire Tip here, you can see a lot of red on the board, but not a lot of hard selling across the grains. Down 1 1/4 for corn. We saw January beans down 6 1/4, but still closed above that area of 1250 that we've talked about a lot here. Good technical support there by way of a trend line, and 1250 in general should act as support. It seemed like it held up in today's action. Chicago and Kansas City wheat both did continue to move lower. Brock, really though, the big story remains Friday's report. We expect a choppy trade here Wednesday and Thursday leading up to the report. That's kind of what we saw today. Yesterday we got some expectations though. Where's the trade sitting here?
You know, we have seen pretty light volume and pretty choppy trade over the last couple of days,
Yep.
and really we're gearing up in anticipation of Friday's report. Today we did get some analyst expectations for what the USDA will show in that report. If you take a look at that table that we have provided here. Corn, you can see that we're looking for, as opposed to what we saw in September, about 170 million bushel increase to the ending stocks. Soybeans about a 22 million bushel increase, and wheat actually a reduction by about 30 million bushels there, 40 million bushels. Most of what for corn and soybeans, what we're looking at there is some production side revisions higher.
Yep.
Most of the analysts that have been coming out with their private forecasts earlier this week and then late last week have actually anticipated corn yield and soybeans yield being bumped a little bit higher. But counteracting that, we are going to see some harvested acres probably taken off the table as well. So we're going to have to see where that all pans out, and ultimately we're going to see it end up on the ending stocks here. You know, wheat, we have been running pretty far ahead on the export pace this year, so I think some of that's going to be taken out of the ending stocks here in Friday's report.
Yeah, certainly. You know, just looking at corn and soybeans as well, there's some expectations we could see some soybean export sales revised higher, but certainly in general, it seems like the yield is going to more than make up for that. Is that a fair assessment on that?
Yeah, it seems at this point that, you know, soybeans, we are running a little bit ahead of pace. It is kind of early in the marketing year to make any determinations longer term, but I wouldn't be surprised to see about a 25 million bushel export sale revision higher. Corn, we could see, you know, slight revision there, maybe 10 or 15 million bushels, but I wouldn't anticipate too much for corn. I think wheat's really where we're going to see the export sales move. You know, we could see a revision higher there by about 50 million bushels, and you know, today we did get a tender that was issued by GASC after the market closed. They're looking for shipments for December 1st to 10th time period, so we'll have to see if we win some of those shipments onto our wheat books there. Yeah,
certainly. So export sales in general have looked very good, but bottom line on Friday's action, the trade's going to be focused on that ending stock number. So we'll be reporting on that live as it comes out on Friday, 11 o'clock Central Times when that report is out. We have been getting a lot of questions here in the office from producers thinking about moving some grain or removing some risk prior to Friday's report, and that's certainly not a bad idea based on what the trade's expecting. Today we did take a look at what the cash forward curve is telling us for corn and soybeans. Take a look here for soybeans. We still see a market that is paying producers a good premium through January to store beans. It's not as big as what we've seen here in the last several weeks, but as of yesterday, we see on average that January cash price sitting 7 cents above the spot November bid. Bottom line though, looking at this chart, you can tell that the cash price really starts to dissipate once you get into February, March, April, when the trade expects South American beans to really be entering the market. So if you're a soybean producer here looking at selling some new crop bushels here prior to Friday, really look closely at your local market in that November, December, January, particularly if you can get it to the river. We've seen very good premiums there. Corn remains a little bit of a different story here. Not a huge incentive here for producers to store grain. We're only seeing a 6 cents carry all the way through March on average for cash price across the U.S. right now. What that is telling us is that holding cash corn into the winter is going to be a pretty risky proposition. You'd need to be pretty darn bullish this corn market to hold through March with the cash price or with that cash premium only adding 6 cents for storage through March. So I guess the bottom line is right now for corn and soybeans, it seems like it might be a good opportunity to sell into the cash market before Friday's report if you're nervous about those numbers. And if you have any questions about making those cash sales, feel free to give us a call here at the office. Our number is 877-472-4607. Coming down the pipe here this week for grains, we got ethanol report out tomorrow. Thursday's export sales day as always, and then Friday is kind of the big show here. So that's November 8th USDA WISE report. We'll help keep you posted on expectations leading up to Friday. Thanks a lot for joining us, and we'll see you tomorrow.